Corporate Finance Excel Practice Problem. In this presentation, we're going to work a practice problem in Excel related to the creation of financial statements. In other words, the creation of the current assets portion of the balance sheet from ratios. So we're going to kind of reverse the process here, starting with the ratios, using ratios to create the balances in the balance sheet related to the current assets. Get ready. It's time to take your chance with corporate finance. Here we are in Excel. We have the information on the left-hand side. We're going to put that into the blue area into our worksheet on the right-hand side. Our primary objective is going to be to create down below the current assets section of the balance sheet. So in other words, we're going to start with some of the end results that we have, the ratios, use those ratios to then create the account balances, the reverse of what oftentimes we think of as when doing this ratio analysis type stuff, which is to start with the financial statements, then create the ratios from them. It's useful to do this method for a couple different reasons. One, it's good for projections. So if you're starting to think about what would happen in the future and this kind of thing, then you can use your ratio analysis to basically project things out and think about where you would stand in the future. Also, when you're thinking about test questions, then it's often the case that you're going to memorize these ratios and think you're ready to go, knowing things like how to calculate the inventory turnover and the current asset ratio and whatnot, and expecting them to just give you some numbers and tell you to calculate it. But that's not what they're always going to do. They're going to give you the actual ratio and then make you back into some component of it. So it's really good practice to go the other way. It also allows you to kind of reverse calculate, reverse engineer or work things going one way and then the other way. As you do that, you understand the relationship between them much better, getting a better understanding of both the financial statement relationships and the ratios. So let's look at our data. We're going to say we have sales, the yearly sales, they're all credit sales, and then we have the inventory turnover. When we use the inventory turnover, we're going to be using that calculation using sales as opposed to cost of goods sold. We've talked about that in the past, those differences. And then we have the current liabilities, the current ratio, the average collection period, and then we want to create the current assets section of the balance sheet. The current assets section includes cash, accounts receivable, and inventory. So what we want to do then is we're going to start to take these numbers and see if we can back into some of these accounts that we need, which is going to be the cash, accounts receivable, and inventory. So what you're probably thinking is you're going to think, okay, I need cash. This would be the first way that people would just start to think through this kind of stuff, and I would recommend a different method. So just what most people might do if they were given a problem like this, if they would say, all right, let's start with cash. That's the first number I need. Let me go up here and think about how I can use these ratios to come up with cash. Now, you could do that, but it might be easier then to think about it the other way and say, okay, they gave me these ratios. Why don't I write down the calculations of these ratios and see if I can back into an unknown for them, right? I want to look at the formula for each of these ratios, see if I can get down to just one unknown, therefore, and then be able to write it in the format of an algebraic equation. So instead of starting with what you need to get to, I would recommend starting with what they gave you, the ratios, starting with the formulas you already know, write down the formulas in the format that you know them, and then use the algebra to adjust them to what you need them to be to get to the end results, such as cash, accounts receivable, and inventory. So for example, let's start with the current ratio, because if I was to look at these ratios, I'd say, okay, the current ratio is probably the one that comes to my mind the easiest, right? That's one of the first ratios people start to learn because it's very common and very useful. And that's going to be the current assets. So we're going to have the current assets divided by the current liabilities. Current assets over current liabilities. That's going to give us then, of course, the current ratio. So the current ratio. So we know what the current ratio is because they gave us this 4.1. Let's add a decimal here. We're going to go Home tab, Numbers, add a decimal. What else did they give us? They gave us the current liabilities. So they gave us the current liabilities there. So then I can back into the current assets. So I can get to the total then of our total number that we need for the current assets section, right? The current assets section, it's not clicking there for some reason. Current assets section total amount, I'm gonna get that number. So now we have our unknown. I can put an underline here, Home tab, font group, underline. We can write our algebraic equation, which would be x divided by the 64,000 would then equal the 4.1. And then you can write it down. I would see it vertically like this, then write it down algebraically like this, then solve for x. That's how I would see it, unless you just start to see these things. But many people, they just feel like they should just know this. I should just be able to, pull this out in my head. But that's not always the case, and that's okay. You've got paper, you've got a pencil, write it down the way you know it, then write it down again in algebra, and then do the algebra. Now, I won't do the algebra here. We'll use that goal seek to figure this out because I think it's good practice to do so. To do that, I'm going to delete this. I'm going to say this equals this number. This is the unknown divided by this number. So that's 0. We're going to use the goal seek now. We're going to go data tab up top. We're going to then go to the what if analysis. We'll go to goal seek. And within the goal seek, we're going to pick up we want to set this cell to be what we know it should be, 4.1. And we want to do it by changing this cell. So change the yellow cell to set the current ratio to 4.1. And then it'll do it with basically trial and error. So there we have it. Let's go ahead and double check the number now. Whether you did it with algebra or with goal seek, we can double check it by then doing the math. This divided by this. Let's add a decimal, home tab, numbers, add a decimal. There's the 4.1. Okay, so we've kind of broken down that ratio. So we've broken down that ratio. Let's take a look at the inventory turnover. So let's take a look at that ratio. We could say, all right, I know what the ratio is, and so let me just write it down the way I know it and see if I can find an unknown, which might be useful in order to calculate the current asset portion of the balance sheet. So it's going to be sales divided by inventory. Remember that this one this one has a couple different quirks in it. One is that some textbooks might be using cost of goods sold divided by inventory. So be aware of that because it's the inventory turnover. So we've talked about that in the past. Just be aware of that. And you are comparing a income statement account and a balance sheet account. Therefore, you might have that average thing going on again as well because there's 2 time periods you're talking about. So they might be saying average inventory, typical average being the beginning of the year plus the end of the year divided by 2. So just keep those 2 things in mind depending on the context of what you are looking at. So we're then going to be picking up the sales. So sales, they gave us. The inventory is what we do not know. So I'm going to make that yellow. And then I'm going to say the turnover then is what they gave us at the 8.5. Let's go ahead and add a decimal, home tab, numbers. We're going to add a decimal at the 8.5. Then we can solve for the inventory. I would write it down now algebraically. I like to see it vertically, and then I'll write it down algebraically on a piece of paper so that I can then do the algebra. 372,000. It's going to be divided by x, which is the unknown. It's going to be equal to the 8.5 times. So then you can work the algebra. I won't work the algebra here. I'm going to use the goal seek once again to practice that by deleting this cell and then saying this is going to be equal to the sales divided by the inventory. And now note when I have this problem, it says, hey, look, you can't divide by 0. We don't let you do that. So what I'm going to do is I'm going to put some number here, just some number. Let's make it like 3, just to give me something. Let's make it something that doesn't end up with a bunch of marks there. Let's make it 10. So we'll have 10, and then let's use the goal seek, and it's going to change this yellow cell to what it needs to be. So I'm going to then go to the data tab. We're going to go to what if analysis. We're going to use the goal seek. And I'm going to say, all right, I would like you to make this cell. I would like you to make that cell be the ratio of 8.5 by changing the yellow cell. So there we go. And enter. And then it does it that way. And we're going to say, okay. So whether we did the algebra or whether we used goal seek, now we can then recalculate this. We can say, all right, then let's do the math. This then divided by this, just to double check it, adding a decimal, home tab, numbers group, add decimal. There's the 8.5. So now we have the inventory. So we got the inventory and we've got the total. We've used these 2 items here to do so. Now, the next thing they gave us was the average collection period, 47 days. So the average collection period is how many days it takes us to collect. We're talking about accounts receivable. So there's a couple different ways we've seen to calculate that. One way is a comparison between the accounts receivable turnover and the average collection period. So the accounts receivable turnover and the average collection period we can use to calculate that. Now, if you look at this, normally I would do the accounts receivable turnover ratio and then calculate the average collection period with it. So that's how I would think about it, right? I'm going to think about it in that way. I'm not going to try to reverse the order or, just like the formulas. I'm going to write it down the same way. If I have one unknown, then I'll solve for it. If I have more than one unknown, then I'll leave it where it's at and I'll go to the next calculation and see if we can figure it out with what we have. So I'm going to start with the accounts receivable turnover, which is typically going to be, let's say that's going to be equal to the yearly sales. This is credit sales divided by the accounts receivable. So accounts receivable, the yearly, and notice that when you look at this, the sales is going to be a balance sheet or an income statement number, range in time. The accounts receivable is a balance sheet number, so you have that differences in timing once again. So therefore, some textbooks might write this as the average accounts receivable, which would be beginning plus ending of the year divided by 2. So in this case, we know the sales number up top. We know the sales number here. We don't know the accounts receivable, and that would give us the accounts receivable turnover. And we don't know the accounts receivable turnover as well. So I'm going to say, okay, we have two unknowns right now. So I'm going to stop right there and say, okay, what did they give us with the average collection period? Because normally I would be using this. I could use this receivable turnover to calculate the average collection period. And that would be done this way. We would say, okay, the average days in a year, which once again could be 365, or they might use some kind of rounding method, which would have even months with 30 days in it to round out all the months. 12 times 30 is what we're going to use, using that justification being the 360. That will depend on, what context you're working in. And then we're going to say that the accounts receivable turnover would be what we divide by. That would be the unknown here. We don't know that. And then we're going to have the average collection period. The average collection period, which is what we do know. So the average collection period is the 47. So we have only one unknown here. So we can then solve for this. I would write it down vertically. That's how I'd see it personally. And then I'll write it down algebraically. I can say, okay, 360 days divided by x is going to be equal to 47. Then you can solve for x. I will do so using the goal seek. You can do the algebra here. I'm going to say delete this, and then I'm going to say this is equal to the 360 divided by this number. Now, I can't divide by 0, so I'm going to put some number there just as a placeholder. Let's just say 4. And then I'm going to use the goal seek, which is going to be the data. We're going to go to forecast, what if analysis, goal seek. And we're going to say, hey, look, I would like you to change this number to be what it should be, which is 47, by then adjusting the yellow cell. And then OK. Changes it to 8. We're going to say OK. Now let's see if it's even here. I'm going to say, okay, let's go up top, home tab, numbers, and we can add some decimals to it. So it looks like it's 7.66 something. We're going to round it. Let's round it to 2 decimals. So now we can kind of double check it here. We can say, okay, if I took this 360 time or divided by the 7.66, we're going to get the 47. Now we could add some decimals there and say, is it, because there's going to be rounding involved. So notice that that the goal seek will round it off somewhere, just like you would too if we were doing this by hand with a calculator. So we're always going to have to kind of be mindful of that rounding that's going to go on. If you use Excel, it'll be using the exact numbers and you won't have that rounding. But if you use a goal seek or a calculator, it's going to round it somewhere. It look like 5 digits that it rounded. And then you're going to have that difference due to the rounding. Now, we don't have anything that we can use here in terms of our current assets. We didn't find anything on the current assets, but we did find the accounts receivable turnover ratio, which we can then use up top to figure out the accounts receivable. So in other words, if I say the accounts receivable turnover ratio is this 7.66, and let's add some decimals here, home tab numbers, adding a few decimals. Then we can say, okay, this is now the unknown. So there's the unknown, and now I can write down the algebraic equation, which would be 372,000 divided by x is going to be equal to the 7.66 about. 7.66 about. Again, we have to deal with this rounding is always going to be an issue. So then you could do the algebra here, or you could use the goal seek. Once again, I'll try the goal seek, and I'm going to say, let's delete this. We're going to say this is going to be equal to this divided by the receivable. Now, you can't use the goal seek when it has that error because you can't divide by 0. So let's put some number here. Let's just put 1,000 here so that we can then use something. So then I'm going to go goal seek. We're going to go to the data. We'll go what if analysis, goal seek. And then I'm going to say, okay, I'd like you to change this number to be what I know that it should be, which is 7.66 about, that's rounded. And then I want you to do that by changing the yellow cell here, and say okay. And then it'll give us our 48 there. So we're going to say, okay, that looks good. And then if I multiply this out, we're going to say this divided by this. And then I'll add some decimals, home tab, font or numbers, adding some decimals. Now, okay, so now we have our accounts receivable up top, so we could figure out our current asset portion of the balance sheet because we've got cash, and then we've got the accounts receivable is going to be the next item, and then inventory. Those are going to be our 3 items. Now, we don't know what cash is, but we know what the total is, so we're going to have to back in to cash. So we can start to populate. I'm going to say, okay, the accounts receivable we have here. The inventory we got up top for the inventory turnover. And the total current assets we figured out up top with the current ratio. So I'm going to underline this. So then we need to get to the cash. And if we wrote out the algebra for that, it would be x plus 48563. Where's the plus? This should be plus 48563 plus 43765 is going to be equal to 262400. And then we do the algebra to do this up top. Again, you could use goal seek to do that. I'm going to make this the yellow cell, the unknown. Let's do the goal seek by saying, okay, if I delete this and then sum this up, then we can use goal seek to say that, because we know that that needs to be the 2624. So let's say, okay, data, and then what if analysis goal seek. I would like you to set this cell to be the 262400, the end result, by changing the yellow cell. And then we'll say okay, and it'll do it by the process of elimination. So that looks good. So I'm going to say okay, and then we'll recalculate this by saying the sum of these items is going to be that 2624, and so there we have that. I'll make this blue so we have it here as a population cell. Let's put some borders under that as well. All right.